Welcome to the Property Mindset Podcast, where we dive deep into the journeys of successful individuals in the real estate industry. Our guests share personal experiences and valuable insights, providing practical tips and tools for your own real estate journey. Whether you're an inspiring investor, a seasoned professional, or simply someone who loves real estate, this podcast is for you. So join us on an engaging and informative conversation with some of the brightest minds in the real estate industry. Hello and welcome back to the Property Mindset Podcast with me, your host, Phil Gadd. Today we're diving into the recent decision just yesterday or Wednesday this week by the Bank of Canada to cut its interest rate to 4.5%. This move is set to have widespread effects on the Canadian economy, particularly in the real estate market. So a short break from our show sponsor, eXp Luxury at First Tracks Real Estate Group. Imagine a real estate experience where your luxury property isn't just seen, but showcased, both locally and globally. eXp Luxury is about more than transactions. It's about transforming how high-end properties reach the market. With a blend of unparalleled global exposure, cutting-edge marketing strategies, and an elite network of professionals, eXp Luxury ensures your property stands out in the luxury market. Phil Gadd and the First Tracks Real Estate Group leverage his platform to elevate your listings, ensuring it reaches its full potential. Welcome to the new standard in luxury real estate. So this episode, we're just going to discuss what impact that could have here in Fernie. So the broad economic impact, stimulating economic growth. The Bank of Canada has trimmed its GDP forecast, growth forecast for 2024 from 1.5 to 1.2, reflecting a slower growth trajectory. The rate cut is designed to counteract this slowdown, making borrowing cheaper for businesses and consumers. Potentially, hopefully, I think is what they're looking for, sparking spending and investment growth. Balancing inflation management. While stimulating growth, the Bank of Canada also aims to keep inflation in check, projecting an average 2.4 inflation in the fourth quarter of 2024. This slight increase from previous forecasts indicates a careful approach to managing price stability while fostering economic activity. Impacts on consumers, and more importantly, while we're all here, is real estate and real estate in the Fernie market. So consumer spending and borrowing. Lower interest rates generally lead to reduced borrowing costs, making it cheaper for consumers to finance big ticket purchases such as homes and cars. This can boost consumer confidence and spending, providing a lift to the economy. For Canadians, the variable interest rates on mortgages or lines of credit, the immediate effect will be lower monthly payments, freeing up income for other uses. Real estate, especially here in Fernie real estate market dynamics. The real estate market stands to benefit significantly from this rate cut, with lower borrowing costs, with the idea that home ownership becomes more affordable, potentially increasing market activity. This would be a good sign because we have seen a fairly slow market in the last month or so. This is a positive sign for buyers and sellers alike, as more people may enter the market looking for homes. So what does this mean for you? For buyers with fixed rate mortgages, if you're house shopping with a pre-approval and a fixed rate, this change doesn't really affect you. So keep going and looking for that purchase. For buyers with variable rate mortgages, if you're house shopping with a pre-approval and the variable rate, you might now qualify for a little bit more. So contact your lender or your mortgage broker to discuss that further. For homeowners with variable rate mortgages, if you own a home with a variable rate that adjusts with interest rate changes, your payment will decrease about $15 a month for every $100,000 you owe. So for example, for a $500K mortgage, this means a drop of approximately $75 per month. So, what impact will it have on businesses and currency? So, boost to business investment. Businesses are likely to take advantage of cheaper borrowing costs to invest in expansion, potentially new equipment, and hiring. This could lead to increased productivity and job creation, helping to strengthen our economy. What does it look like for the Canadian dollar? Lower interest rate typically leads to a weaker currency as investors seek higher returns elsewhere. The depreciation of the Canadian dollar could make exports more competitive internationally, benefiting Canadian businesses that sell goods abroad, even though it may increase the cost of imports. Savings, investments, and the long-term outlook. Lower interest rates can mean lower returns on savings accounts and fixed term investments, prompting some investors to maybe look for higher yield, a bit riskier alternatives. So the long-term economic strategy. So the Bank of Canada has signalled a phase of rate cuts, suggesting a cautious yet supportive stance against economic growth. This strategy will unfold with the next date announcements on September the 4th, October the 23rd, and December the 11th, which we will watch closely for the insights into the bank's future policy direction. So in summary, the Bank of Canada's recent rate cut is a significant move with far-reaching implications across the economy, from consumer spending and real estate to business investment and currency value. As we navigate these changes, staying informed and being prepared is key. If you're considering entering the real estate market or making some big financial decisions, now might be a really great time to consult with your professionals. So thanks again for tuning in to the Property Mindset podcast. Do not hesitate to reach out if you have any questions or concerns about the Fernie real estate market. As always, I'm here to help. Until next time, stay informed and keep your positive mindset.